Income Tax Act provides for payment of interest if you have not paid your advance tax fully, or you have not paid the advance tax and you have not filed your return on time, or you have not paid the advance tax as per the installment that is prescribed. There are three sections which takes care of the interest as per the Income Tax Act. 234A, which talks about fault in submission of your return and there is some tax due, then you will have to pay interest on that. 234B, which talks about any shortfall in payment of advance tax, and the third is section 234C, which talks of failure to pay the full amount of installments of advance tax as per the percentages prescribed in the Act. Advance tax is due if the amount is more than 10,000. That means if the amount of tax due from you is less than 10,000 in a particular previous year, then you do not have to pay any advance tax. Also, if you are a senior citizen, then also you are not required to pay advance tax. Now let us see what happens when you have failed to file your return within the due date. Most of the individual persons are required to file their return within 31st of July of the assessment year. Now, on 31st of July, if you have not filed your return, you are filing it, say, in the month of August or September or October, then the interest under section 234A will start from 1st of August and it will be applicable till you have filed your return of income. Now, if you have not filed your return of income at all, and there is an assessment which is done by the department based on certain informations they have gathered, then interest under section 234A will be paid on the basis of the interest calculated from the date you were supposed to file the return till the date of assessment order. The rate of interest is 1% per month, that is 12% per annum. And if it is a fraction of a month, then you will have to calculate that month in full at the rate of 1%. Now, there are certain complications which arises with section 234A. You will have to consider the tax that is payable by you on the basis of the assessment that has been done by the income tax department. Thus, if you have calculated the tax as per your own calculation, and later on the department has done an assessment and has increased the amount of tax that is due from you, then you will have to pay interest under section 234A on the basis of the assessed income and not on the basis of what you have filed as your income. Thus, the additional amount that is added for the assessment purpose, you will have to pay interest on this amount. Another point to remember here is that the interest is calculated on a simple interest basis. That is, it does not get compounded on a month-to-month basis. The tax amount for the purpose of calculation of interest will be reduced by the amount of advance tax that you have already paid or the tax that has been collected at source, that is the TDS, that has been deducted from your payments. The question may therefore arise that if I am to pay interest on the assessed tax, how will I know the assessed tax at the time of filing of the return of income? Well, the answer to this question is that you will calculate the interest on the basis of your returned income at the time of submission of your return. But when the assessment is completed, if the department comes out with a higher tax for a higher income, then the differential amount of interest you will have to pay to the department. This is in a nutshell, the provisions of Section 234A, which is actually relating to defaults in furnishing of return. This interest is actually for such defaults. Now let us look at Section 234B, which is on the basis of short payment of advance tax. Now, if you have calculated the tax which is lower than what it is coming under Section 210 of the Income Tax Act, then the difference of the amount which you should have paid and the amount which you have paid, you will have to calculate simple interest at the rate of 1% under this section. But the point to note is that it will start from the 1st of April, that is the immediate period after your previous year has ended, right up to the date on which your income is assessed. Now, at the time of filing of the return, you will not know when the return has been assessed. So, for the purpose of filing your return, you will be calculating this interest up to the date on which you file the return. Now, in case your assessment is of the amount which is the same as the filing of your return, then you do not have to pay additional charges as interest under this section. However, if the assessment is more, then you will end up paying the interest right up to the date of the assessment. Now we have a look at Section 234C of the Income Tax Act. This section provides for interest on deferment of advance tax. That is, you are supposed to pay advance tax on particular dates as installments and you have not paid the amount. What is the Income Tax Act saying about the installments? You are supposed to, as an individual, pay 15% of your tax computed for the year within 15th of June, 45%, that is another 30% by 15th of September, 75%, that is another 30% by 15th of December, and the balance, that is 100%, within 15th of March of the previous year in which such income arises. Thus, if you pay an amount of tax which is less than 15%, then the differential amount you will have to pay interest at the rate of 1% for the period, that is in every case 3 months. Here they have given some benefit to the assessee. If you have paid short of the 15% as on 15th of June, and this shortfall is less than 12%, that is, you have paid an amount which is above 12% of your total tax dues for the year, and it is less than 15%, then you are not required to pay the interest under Section 234C. Similarly, for the due in September 15th of the advance tax, which is 45%, you have been able to pay only 36%. Then also you do not have to pay the interest for this installment. But if you are lower than 36% on that date, then you will have to pay interest for the shortfall of payment of advance tax for that installment under Section 234C. Another important aspect of Section 234C is that this is on returned income. That is, the tax which you have calculated on the returned income will be considered for the installments for calculating interest under Section 234C. Thus, unlike 234A and B, where the assessed income is considered, 234C is always on the returned income. This is one advantage that has been given by the Income Tax Department to the assessee. Another very common mistake that people make while calculating the interest is the provisions of rounding off as provided by Rules 119A of the Income Tax Rules, which states that if the amount of income that you are considering for the purpose of interest calculation requires to be rounded off to 100. If there is any fraction, this fraction is to be ignored. If you have any doubt as to how these are to be done, you can always send me an email and I will try to answer it. My email ID is given at the end of this video.